This is Jonathan Mickles with the Strategic Multifamily Investing Podcast, and today I have with me Mr. Kent Halliburton. How's it going?
Very good. Very good. I am happy to be here. Thank you for having me on and conversation here today.
Excellent. So you and I know each other through one of your contacts, Nathan, and he mentioned that Sazmining was doing a lot of stuff around the Bitcoin area. So can you explain what your company does a little bit, and then we'll jump right into some I guess foundational things for people around Bitcoin.
Yeah, so we offer mining as a service. And so mining is from a simplified perspective, it's a security element. So it's one of the ways that the Bitcoin blockchain is secured. And we harness electricity to secure the blockchain. And for doing that security, we receive the new Bitcoin that are being minted according to the monetary policy of the Bitcoin network.
Excellent. For those of us who already kind of understand what you're saying, it
Yeah,
makes sense to us. But let's go back for those who are just the, uninitiated, and talk a little bit more about what Bitcoin is and this
yeah.
whole thing about crypto, et cetera. What is Bitcoin?
So thank you for double clicking. I was going to if you didn't ask. Bitcoin, the way to think about Bitcoin itself, right, just to get very fundamental, is every 10 minutes, a block of transactions is sent out across the network, and that block of transactions gets added or appended to the previous block of transactions. So roughly every 10 minutes, there's a block of transactions that get sent out, and everybody that's running the Bitcoin software on their devices, whether that's a computer or a server they have set up, has a copy of the ledger. And so in this way, there's nobody that's in control of the ledger, but everybody that's running the Bitcoin software has ownership stake in it, meaning that there's a copy. And so the blocks that are sent out, that's really kind of the core of Bitcoin, is in a decentralized way, keeping an accurate record of a ledger. And mining is the specific part of the Bitcoin network that actually sends out those blocks. And by sending out those blocks, the only way that that can be done, according to the rules of the network, is by harnessing electricity and solving a mathematical problem. And so the reward for solving that problem and sending the next block is a few Bitcoin. And that the way that the Bitcoin is produced changes over time. But in total, there'll never be more than 21 million. And right now, 19.5 million have been mined. And if I need to click a level deeper on that, I'd be happy to, Nathan, because I know that here's the thing with Bitcoin.
Yeah.
It seems very confusing at first. And when you start to get your head wrapped around it, you actually realize, oh, there's a lot of moving pieces here,
Yeah.
but it's actually way simpler than how dollars come into creation. And that's the actual comparison that you need to make, because most people don't understand how the Treasury interacts with the Federal Reserve to produce the money that we use and spend, and the dollars. And sure, you can use Zelle and zap around money from yourself to your buddy, but there's layers and layers and layers of infrastructure underneath that makes it happen, that goes clear to the Federal Reserve. And the
Right.
Bitcoin network is it. That is it. And there's not all the abstracted layers. And so your understanding of the Bitcoin network is the equivalent of understanding the Federal Reserve. And so it's actually much simpler. And in essence, electricity and an encryption is what secures a ledger that nobody can change over time. And there'll only ever be 21 million. And it makes it so that there's no human being that's in control of the system. And that really is solving a problem that humanity's had for arguably 5,000 years, which is that every time there's been a centralized point of money creation, it's been abused. whether it's in the first generation, the second generation of humans in control of it, but we do not seem to have the self-control as a species to handle the ability to own and have control of the central money supply.
Can I take a level of extraction as an example? A lot of people use Cash App today, right? And we think Cash App is, really peer to peer, financing. I'm sending a piece of money from myself to another person. But actually, as you mentioned, there's layers in that because as you're sending money, from person A, from Jonathan to Kent, it really is from Jonathan's centralized bank, wherever Jonathan banks, through the Cash App network to Kent, who has money in his centralized bank somewhere. And then there is a ledger that Kent has, and there's a ledger that Jonathan has that both is controlled by our banks. So the underlying thing is that there are banks that are involved in this exchange of money, as you mentioned before. But, with Bitcoin, what I think I'm hearing you to say is there are no banks involved. It literally is money that's sitting somewhere that I have and somewhere you have. Where is that money sitting? For anybody else who's thinking like, well, if there are no banks involved, where is the money being housed?
That's right. So it's the ledger. So I mentioned earlier, anybody that's running the Bitcoin software, they have a copy of their ledger on their computer, right? So most people running this on a personal computer that sits off to the side, or what they call a node, which is basically a hard drive and an internet connection, right? And the new blocks come in, they get analyzed. Did this obey the rules of the Bitcoin network? If so, let's add it to the ledger, right? And so there's tens of thousands of people that are running this software across the planet right now. And when I say across the planet, I mean quite literally. For instance, I'm talking to you from the Peruvian Amazon, which is not necessarily a typical place to be running a Bitcoin node, but as long as one human being has a copy of this ledger, then the entire network can be reproduced. And so you've got all these individuals that have a copy of the ledger, and it becomes an intractable problem to convince everybody to change the ledger to be able to double spend the money, for instance. And so in this way, it's like a school of fish, right? When you see it fishing, swimming in the ocean, that school of fish is not worried if a shark comes by because, okay, maybe one fish out of the pack gets eaten, but the school itself is fine. It's that security in numbers that Bitcoin really relies on, and the ability for all of us that are operating this software, like we don't want to see the number of Bitcoin changed because it's in our self-interest for it to stay the same. We don't want ourselves to be diluted. And so that's how everybody operating the network is, and therefore there's very little incentive to change it.
So then again, there are tens of thousands of people across the world that are actually running this software, and their money is being stored in what they call a wallet, right? That's
Mhm.
somewhere on your computer or on your phone. So that's where the money is. And, we won't go further deeper down if you're double clicking on that. But where you come in to play is that your company actually does the work, the computer calculations behind the scenes to create blocks, as you mentioned before.
Mhm.
Now, just a little while ago, we had this thing called a halving. I heard you mention that there can only be 21 million Bitcoin mined. There are currently 19 million that have already been mined. So that means that there are 3 million that are still out there, right? Or so that need to be mined. Aren't you guys going to be get obsolete soon? I mean, help me understand what that's all about.
Yeah, so this is one of the counterintuitive parts about Bitcoin. So let me share something. I think this is a fundamental piece, and if I could provide this level of education, you mentioned wallets, and
Mhm.
I want to step on or talk about those for one sec because this really confuses people, and the reason why is because you have to translate from one paradigm to another with Bitcoin, and the paradigm that you and I are used to, we're used to an email account and a password,
Mhm.
right? If we mess up the password, we click that little button that said forget. They send us a link. We go redo the password. We got a new password now, right? There's a central party that is managing that, right? With Bitcoin, there's no central party. You're interacting directly with the network. And the equivalent in the Bitcoin network is your wallet address and the private key. The
Mm,
private key is your secret that allows you to move your Bitcoin that are on the ledger. And that secret is the equivalent of like your password to allow you to access your account. Except if you lose that private key, there's no third party to go to give it back. So that is where maximum accountability comes into play with Bitcoin. And I mention that because that confuses a lot of people. Like, oh my gosh, you mean that there's no bank, there's no third party to go to? This is all my responsibility. And yes, it is. And that is frightening at first. And then it's exhilaratingly empowering once you get used to it. Because you realize, my gosh, I got a buddy in Australia that needs $10 from me. Boom, here you go. And by the way, I could not make that transaction if I needed to move that money through the banking system, just straight up. There'd be no way to do that. But
yeah.
with Bitcoin, I can. So that's the empowering side of it. Now, as far as what we do, right? So I mentioned at the top, but I'm sure it was pretty confusing until I explained a little bit more about the network. But the ledger, right? How transactions get ordered in that ledger is when a new block comes out. So roughly every 10 minutes. You can think about that as like the heartbeat of the Bitcoin network. So every 10 minutes there's a new block. Now there's hundreds of thousands of I'll call them computers just to keep it super simple.
Yeah.
There's hundreds of thousands of computers, millions that are working to solve the next block to be able to own the reward that comes from solving that block. And so what happens is they order all the transactions that are sitting there, and I can go into the transactions themselves, but just to say they take a bunch of transactions, they say, okay, there's a block. Now I got to solve the math problem with this block, and when I do, I'm rewarded. Now, how does the reward like how many Bitcoin do I get? Well, that's the monetary policy of Bitcoin, right? And that's where the 21 million come in. So every 4 years, the amount of Bitcoin rewarded for solving a block gets cut in half. So we started off with 50 Bitcoin per block. So that's 50 new Bitcoin are being released every 10 minutes. It then went in 2012 down to 25. In 2016, it went to 12 and a half. 2020, it went to 6.25. And now the latest happening, it's 3.125. So when I solve a block using my computer, and I beat out all the other hundreds of thousands of computers that are also trying to solve that block, I am rewarded with 3.125 Bitcoin. Now, to your point, is that economic opportunity disappearing? This is the counterintuitive part. The counterintuitive part is even though there was 4 million Bitcoin left to be mined at the last halving, this halving, the economic opportunity is bigger than the previous halving. And the reason why is because the price of Bitcoin has gone up.
Gotcha.
So even though there's fewer Bitcoin left, the dollar value has increased. And that's why people are like, you see more and more dollars flowing in to participate in mining because there's something that is called the Lindy effect that is starting to occur with Bitcoin. And the Lindy effect just says that when it comes to a monetary system or even in a general technology, the longer that it persists, the more we begrudgingly start to trust it. And you can feel this, right, Jonathan? Like you probably heard of Bitcoin. My guess, maybe first time 2017. That's when most people started to hear about Bitcoin.
Hmm.
Probably ignored it. 2021, when Elon started talking about, okay, what is this thing? Let me start doing a little bit of digging, peel back a couple layers of the onion. May or may not have bought some. My
Hmm.
guess is by the time that we get through this next cycle, which the cycle is every 4 years, and the cycle peak, everything appears to be right on track, will be 2025. My guess is that we will be past the early majority phase and we'll have a good chunk of the marketplace will have some ownership in Bitcoin and start to understand it.
Yeah.
Now, that play brings in more people to hold Bitcoin for longer. And because there's only 21 million, when there's an influx of demand and no supply change, what happens? Price
Price
goes
goes up.
up. That's the only thing that can change.
So
And
you,
so this is the only asset on the planet that is provably, verifiably scarce and cannot be produced more. I mean, it's why the price keeps going up.
So there are a couple of things that you mentioned. You mentioned by 2025, you saw that you believe that most people will have some ownership in Bitcoin somewhere. But as I understand, a lot of financial institutions have been buying Bitcoin along the way. Am I correct in saying that? I mean, have you've been seeing that?
Yeah, that's correct. That's correct. In fact, a lot of the big mining and or big financial institutions, Wall Street investors and such, are actually investing into the mining sector. And the reason why is because mining Bitcoin gives you the opportunity to acquire Bitcoin at a lower price than going to the exchanges. And that's really what the driver of our business model is. A, if you understand Bitcoin, then B, there's an opportunity to acquire it at a lower price. And when you have the world's hardest asset, so the inflation supply of Bitcoin at this point in time, right now, was not this way last year, but right now, the inflation rate of new Bitcoin coming onto the market is lower than the inflation rate for gold that is brought up from under the earth.
Wow.
This is provably the scarcest asset on the planet. And, and, and if you look at the history of how our species has operated with money, there has never been a point in time where a harder, more durable, scarce form of money that was fungible, I mean, you could trade it alike one for one. There's never been a time in human history where we found a better form of money that the entire species did not go for that. So, and from where I sit, it seems to me to be fairly inevitable. Yes, there will be problems. Yes, there will be fights. There'll be a lot of people to argue over it. But if you just analyze it from human psychology, it seems like the biggest no-brainer asymmetric bet on the planet from where I sit.
So then this is great because I'm going to ask another question that's kind of anti-Bitcoin and
Sure.
anti-crypto. There's the rise of the CDBCs. And the
Mhm.
World Economic Forum just recently mentioned, we need to digitize money. And so it appears that there's an effort by some large banking institutions, financial institutions, and even governments to put together their own digital currency, but it's not decentralized, but it seems to be more centralized. Can you talk to me about the CDBC and what your thoughts are on that in relation to Bitcoin?
Yeah, I would be happy to. I think the better term for a CBDC is a 1984. And I say that jokingly, but go dig into it and you'll see what I talk about. So there are three major functions that any money has to have. It needs to be a store of value, so a place where I can put the value for my labor into it and it's going to hold relatively well. Now, we know inflation has been eroding that for fiat, but roughly speaking, if you look at gold, it's been a good store of value for basically 2,000 years. You can go clear back to Roman time. 1 ounce of gold was enough to buy a quality man's suit. Still proves that today, right? So that's been a good store of value. Now, the second is a medium of exchange, meaning that if I give you $100 bill, you're going to give me $100 worth of goods back, right? That's a medium of exchange for me to transfer value and exchange for goods and services. Now, the third is a unit of account, what you price your goods and services in, right? So we're very used to the dollar being a good unit of account. We're very used to the dollar being a good medium of exchange. I think a lot of us are questioning the dollar's ability to be a store of value, but there's a fourth one that is not talked about very often, but that is a means of control. And
Mhm.
you have enough gray in your beard that I think you could probably remember, as do I, call like to like here, that you could probably remember a time where you could pretty much just hand people $10 and get $10 worth of goods and services. And there was not an element of surveillance to that $10 transaction from me to you, right? Now, the US IRS, I can't remember what the dollar threshold is, like something like $60 now. Like basically any transaction that is done digitally is being tracked. And if you look at the rollout of CBDCs, there's been trials that have been going on in China, And they've already talked about this in the different central bank curriculums about the CBDCs. It is very clear that there's means of control that can be placed on the money. What does that mean? Means of control. It means that, for instance, if you have, your transactions are tracked. If you've eaten too much steak in a given month, when you go to the cash register to buy another steak, the cash register may say no because that money is programmed. And so therefore you are controlled as to what you can purchase. You may be given money as stimulus, go back to COVID time and said, okay, that $1,200 stimulus check you got as an individual, you've got 3 months to spend it. Otherwise it expires. Right? Like these are means of control that can be inserted through CBDC. And from my experience in life, if there is an incentive available, it will be taken at some point. Whether that is done on the rollout, I would be doubtful, but within a certain amount of time, there will be some element of control that's put on it. Let's say you say something that is deemed politically incorrect on social media. Well, if you've got CBDCs, somebody in the Federal Reserve can say, okay, Jonathan, your account needs to be defunct. You now exiled from using CBDCs. Good luck with your life.
So the CDBCs you're not a fan of, it appears like, or that it would be it would not allow people the freedom to be able to send that $10 to your friend, say in Australia, or to anyone that you feel that you may want to donate it to give because it would be surveilled. But there's another element, and I'll just ask this as a secondary thing because I want to get more to your business model.
Yeah.
Someone says right now Bitcoin and all the other cryptos are being monitored already right now. I've seen a couple of things come across my desk and it's already being monitored. So what's wrong with the CDBCs?
So yeah, I would say the difference is that nobody controls the network versus CBDCs is controlled by people, right? And people can be politically captured. That is the fundamental difference. So as far as yes, you can track all the transactions. In fact, you can go look today. It's completely transparent. Now, is anybody's ID tied to, the wallet address? No. Can it be? Yes, it can be. But it's non-trivial to make that connection. And so for that reason, Bitcoin is considered pseudonymous, right? You don't know who owns the address unless you do some serious investigative sleuthing, tie it to maybe somebody's IP address, triangulate it. Like it's just not a trivial thing versus, in as the world of CBDC, somebody can come along and say, okay, you've been deemed a pariah of the state. So therefore, we need to put sanctions on you. And somebody sitting in a back office can go into a computer program and say, okay, your CBDCs have all expired. And if that's what's used popularly throughout society, how do you transact? Right. And I think this is the thing that a lot of people in the West are coming to realize. I mean, Bitcoiners have just gotten there early. That's it. But I think all of us are going to get there, which is that the freedom to transact actually underlies all of our other freedoms.
Mm.
How can you express the freedom of speech if you can't actually purchase a computer to go online to post your article? How can you have the right to assemble if you can't purchase a bus ticket to get to the place where everybody is going to assemble? How can you have the rights to use your gun if you can't go buy bullets? All these underlying freedoms that we've been given are dependent on the freedom to transact, which is why for me, yes, I am absolutely against CBDCs. It is a political battle for people to wake up to realize that ultimately CBDCs, in my opinion, will become an open air prison for humanity.
When do you expect the rise of CDBCs to occur? This is my last question on this one here. I promise I'll shift because we want to honor your time.
Yeah, that's a good question. I think it's very political in nature. So the
Okay.
more people that wake up to the potential for abuse with CBDCs, the harder it will be to bring them to bear. And I think so. not going to lean in on the red blue fight that's ever going in the U.S. And I will say that it's extremely positive that the GOP just inserted into their party language that they were against CBDCs. To me, that's very positive. They did that just in the last week or so. I saw a note about that. So yeah, it seems like there's enough people. This has to be a grassroots thing where people wake up to realize it, but there's enough people that have that it's gotten the party's attention, at least on the GOP side. And I would hope it happens as well on the Democrat side.
Okay. So you mentioned that you are in the Peruvian Amazon. Am I correct in
I
saying?
am. Yep. Yeah,
So
it's an odd life story that I got here. It's
I,
in no way I didn't run away from the US or anything intentionally.
but you mentioned I was bringing that
Mhm.
in because there's been a lot of talk over the years, the decade or so, about what we're doing to the Amazon as a global citizenry, in terms of
Mhm.
down a lot of trees, and a lot of times that's being done in order to bring in industry. And you mentioned Bitcoin using energy and electricity, and so I'm trying to understand how you all do what you do with the vast amounts of energy that are needed to actually mine things. How are you taking that in the economy and the environment into view?
Yeah. So we mine exclusively right now on excess hydroelectricity. So what that means is in most circumstances where there's a hydroelectric dam, it is not close enough to a population center to utilize all of that electricity. So this is a counterintuitive point about electricity. Electricity is not stored very well. So when it is generated, it either has to be consumed at the time of generation or it's basically lost. And so when there's an excess of hydroelectricity, then it becomes very cheaply priced. And that is exactly the economic opportunity that Bitcoin miners like ourselves are looking for. So I live in Peru, but where we have our data centers, we have one in Wisconsin and we've got one in Paraguay, another South American country. My life journey has just brought me to Peru, but we operate those mining centers. We've got hands on the ground in these locations, but I don't need to physically live where that data center is for us to be operational. And I think this is so what I love about Bitcoin is a quote an advisor of ours gave, which is like basically Bitcoin mining is everything you didn't know about money combined with everything you didn't know about electricity. And it kind of puts it together and it just really befuddles a lot of folks. And I think that that's actually a good thing because it's causing all of us to get educated both on money and electricity. And that's basically the FUD that Bitcoiners have been blasting through like year after year, and it's slowly changing. You can see the education level changing. So when you look at Bitcoin mining, right, the biggest cost to mining is electricity, right? And so naturally, I am incentivized as a Bitcoin miner to find the lowest cost electricity I can find. What is the cheapest electricity that I can find? It's electricity nobody wants,
Hmm.
right? It's the electricity is being discarded, wasted. So we're coming into these situations where electricity is wasted and discarded, and people are extremely grateful that we can monetize that for them because that's revenue that would have just been literally, lost and gone to ground. And if you look at what electricity is discarded or unwanted, it is the electricity is produced at the wrong time or the wrong location. And that electricity a lot of times comes from solar, wind, and hydro. So just by happenstance of incentives, Bitcoin mining is 57% carbon-free power sourced, and that is the highest of any country or industry on the planet. So it is already the cleanest run network or industry that exists, and that's been growing month after month, year after year. And I suspect that will continue to grow. And in fact, there's the Bitcoin miners, there's sort of two ends of the spectrum that they're coming in. they're either coming in and being able to be the buyer of last resort. So that hydro dam that was built, 10, 20 years ago, it's got all this excess electricity. We can come in and buy that and turn that waste electricity into revenue. On the flip side, it's also proving to be the buyer of first resort. So, for instance, there is a company called Gridless in Africa that has been able to come in and electrify regions that did not have electricity running 24 hours a day. And they're able to do this because there's like small hydro dams that are built, but they can't be run 24/7 because the population is too small to actually purchase all the electricity. So the dam operators sort of shut it down, and it's a patchy up and down network. Well, Bitcoin miners come in and say, hey, why don't we just buy electricity from you, run our miners off of it, and then you can keep the power generation going 24 hours a day. And by the way, if people start to need to use this electricity, we'll just shut off a few of the mining rigs. And then, if you need to run a bread oven, you need to run a few more refrigerators, whatever it may be, we'll just cut off the Bitcoin miners. So that's the beauty, is like Bitcoin miners are location agnostic. They can be put anywhere that has an internet connection, and they are able to be shut off and turned on a dime. There's no other product that you can manufacture that has that capability. And that capability means that it can actually help to regulate the grid itself. And that's a new type of customer that utilities are slowly coming around to. In fact, if you look at last year in Texas, there was a major ice storm that came through, and it caused some power generation to
Mhm,
be shut down, and they
mhm.
didn't have enough power for the grid. They called up the miners and said, "Hey, we need you guys to power off." Powered off, and that power that they were harnessing to run their miners with suddenly was available on the grid. There's no rolling blackouts, no brownouts, none of that. Everybody was able to get through it, and without any loss of life. So you can arguably say that Bitcoin mining saved lives in Texas this last winter.
Wow. So this is the crypto miners to the rescue. And we're not necessarily talking about miners with the hard hats. This is all done with computers. So these are, computers linked together to solve these
That's right.
math problems, if you will, that we just talked about. And I know we're at our limit with in time with you. For other people, just some of the key takeaways. You can buy Bitcoin. You have the new ETF that came out. But the other way is that you actually can mine Bitcoin, and that's where Kent and his organization are there. And if you're interested in potentially, taking part in mining or buying a miner and having it in Wisconsin or Paraguay, you can reach out to Kent. How do they get in contact with you, Kent?
Yeah, so www.sazmining, mining.com, all one word, is our website. My DMs are open if you're on Twitter, now X, at K Halliburton. So feel free to reach out, ask any questions. And I would say the punchline. So you're right. To me, I believe in this asymmetric opportunity with Bitcoin. That I believe the right way to diversify is in your acquisition strategy, not amongst crypto. That has not proven to be a very effective strategy in general. If you look cycle over cycle, the top cryptocurrencies are always fading, but Bitcoin always remains number one. So when it comes to crypto, it's not diversity in crypto tokens that you want, is diversity in how you're acquiring your Bitcoin. And so the punchline, and what's driving our demand, is that right now the cost to acquire a Bitcoin with us through mining is $45,000. If you go to an exchange today, the price of Bitcoin is 58,000. Now, I know that both of those numbers will change by the time you're probably viewing this video, but that discount will remain. And that's the opportunity, is the ability to acquire Bitcoin at a lower cost by mining it. And that's what's driving our rapid growth. And we are the only company at this point that has come to market with a solution like Netflix, but applying it to the Bitcoin mining sector. So kind of the web app approach to the mining experience. So yeah, please reach out if you've got questions. I'd be happy to chat.
And I hear somebody saying, well, Jonathan Kent, I don't have 45,000 right now, but you might have it in, say, your 401k or your IRA. And if you happen to be potentially, I know some people who've done this have self-directed some of those, meaning they've gotten a self-directed IRA, self-directed 401k if they're in business for themselves. Those things may allow you to be able to buy into, if you will, Kent's company and get that discount and begin to acquire Bitcoin, not from just purchasing it directly or purchasing the ETF, but doing so through mining. So, Kent, we have a uh, something here that we call giving people the boot, which is the piece of advice for them to do the next thing that will spur them on to success. So give us the boot.
Mm. Give you the boot. Okay, let me address one thing you said.
Sure.
Even though the cost to acquire a Bitcoin is 45,000, because you can acquire fractions of the Bitcoin, what you're doing is you're buying a piece of hardware, and the hardware costs right now to get started are anywhere from 2,500 to 6,500, right? So you don't need to go buy a full Bitcoin. Now, as far as to give a boot, I would say the most important thing you can study right now is the question, what is money? I genuinely believe that, because once you understand how much of a society is being tweaked by money printing, you'll realize the importance of Bitcoin and its existence right now. And that takes reading books. There's no other way around it. So do the work yourself, study Bitcoin. And I have not met a single person that has read a couple books that has walked away with anything less than a substantial allocation in Bitcoin. And it will seem crazy. It will seem like a cult at first, but the more you read, the more sense it will make, and you come to your own independent conclusion. And I would argue, answer the money, what is money? Or answer the question for yourself, what is money? And answer the question for yourself, how can Bitcoin fail? And by the time you're done with that, you'll be a stark raving lunatic about Bitcoin like I am.
Got another question for you, Kent. Going to double
Yeah.
click back on what you said before. So
Yeah, do it.
acquiring a miner with you all right now at the time of this is mid 2024 is anywhere from $2,500 to $6,500.
Correct. Yeah.
And once they do that and they place it, is there a fee or how does that work where, hey, I've got 2,500, it might be through my self-directed, it might just be out of my own cash and I give it to you. What does that process look like?
Yeah, so you purchase a piece of hardware, this computer, right? Within a month, we have it deployed in our data center. And then you're paying for us to maintain it on a monthly basis. And that monthly basis is $95 to $150 at the time of saying this. And that's just basically the electricity that it takes to run your device. And all the Bitcoin that you receive, they go directly to your wallet. So you're getting them fresh off of the Bitcoin network. So those Bitcoin are yours, but you do have to pay the electricity costs. And our business model, just to be very specific about it, we don't make money selling that piece of hardware. We don't make money selling electricity. There's no markup on those things. Instead, our management fee and how we make money is just 15% of all the Bitcoin that are mined. When it's paid out, 15% goes to us, 85% goes to your wallet directly.
Well, certainly, listen, we thank you. This has been a power-packed, very short podcast, but it's going to have lasting implications for a lot of people, and you're going to make a lot of people happy. We hope that tons of people go out to reach out to Sazmining and acquire Bitcoin at a discount. Listen, thank you again for your time.
You're very welcome, Jonathan. Thank you.